Hello guys, glad to have you on board again today. I hope you had a great weekend. We're back in business as I was pretty much off later last week. I needed some vacations and it was pretty great actually, and it's been doing the job pretty well. So I'm back in here with a much better mindset after doing some skydiving. And anyway, so we're going to talk about the markets. As usual, we're going to start with the cryptocurrencies, so our crypto folks will be able to move on to something else if they don't care about the rest. So let's have a look at what we've got in a weekly context. And just to be honest, I really never would have expected such thing. We were pretty much overbought for quite some time. We were overbought in this area already, so the market just decided to, no way, we're not going to trade this. So I've done my job. I think going in this area was starting to rise some red flags and stuff like that, so I would have liked to profit take in this area, but the market decided it otherwise. We got straight up to 23% retracement. So let's be honest, whoever was forecasting some bearishness to come, that we will just pull backing in the bear trend, whatever this is, they're totally wrong right now. We got a strong weekly bullish momentum. That doesn't mean it's not going to reverse here. All I can tell is that I'm not profiting from this. At least I do, because I still have some cryptos in my portfolio, just not triggering any profit taking in this area because I already done what I expected to reach out to. So we overcome the expected targets, so that's great, but I would like to profit from it, but I can't. So the problem is I just let it go with it. I'm not making it personal, so I didn't really manage to highlight the right targets, but still, who would have? We've got weekly bullish breakouts who have been targeted and reached out to. So the thing is that those targets, we weren't supposed, I never thought we would be reaching out to them, but we did in just a couple weeks. So it's really surprising. I rarely see that kind of stuff. So the question is, what does that actually means to me? To be honest, I don't know. All I can tell is that we're trading some pretty uninteresting areas in a weekly context. We're trading average pricing, so the 50% context channel, we're not nearly trading at trend channels in a weekly basis. So I would say this is definitely a range breakout, but a bullish breakout. So we don't bullish breakout, and moreover, we don't reach out to the bullish breakout targets in a bearish trend. So what we have in here, it just says one thing, what I've been saying out loud for quite some time. The crashes, it's over. Whether you like it or not, it's not going to go lower. So it's very less likely going to go 1,800 right now. I don't nearly even think we could do that. Even dipping a little bit lower than that could be done, but needs to be done with a black swan. So something unexpected must show up at the moment if we want to make lower lows in the bitcoins. Otherwise, in my personal opinion, we're done. We're dealt with it. The crash is now over. I think we have a range boundary. The next interesting area is going to be there, but the question is, how do you manage to go there? And I don't nearly even think this is buying in here that gives us a decent opportunity to target those areas. I think we're going to have a strong and very painful long pullback, probably a year of uninteresting prices coming out of this, to actually get to something interesting. So my question is, to me, Bitcoin 23% fib retracement, I don't nearly even see any fucking thing else to do out of this. Does that mean you need to sell your Bitcoins to buy them cheaper? Fuck no. Do you really understand what the goddamn word buy and hold means? Buy and hold means even if price had to pull back, or even if prices has to make lower low, we don't give a damn. We just let it go until it reaches out to your target. I've been clear with my targets since the beginning. I'm not targeting anything but this area, all right, 13 maximum I'm targeting. In here I'm probably going to profit take a lot. I still have some bitcoins, all right, so just in case things get out of control and we're worried about to switch bitcoins or stuff like that, I still want to have them in my portfolio no matter what. It's just my next profit taking area is in here, and it's fucking largely it's fucking away from current prices. So don't expect to reach out this in a straight line. We could, yes, but very less likely. So everything's always possible. All you have to do is to manage the risk for what seems to be the most probable without taking too much risk. So to me, the most probable is after doing this in such short notice, we're probably just going to die in this area, because I very less likely see any chance we could bullish trend out of a bearish trend, because it rarely happens. After crashes, whether you like it or not, we always have to create ranges. So as you can see, we bearish broke down in here, failed to reach out the target, suggesting the bears are losing strength, but that was pretty much expectable. No one was expecting bitcoins back to $100, so any fucking way. All right, so bearish final exhaustion move, bullish breakout, which means we bearish breakout, bullish breakout. That definitely means we're ranging. All right, so in a range, you don't, if you want to sell this range, you can definitely do it. If you want to short sell bitcoins, I think right now you do have things to do it, but you're going to require some signals, and for now we got nothing, obviously. So wait for signals if you want to short sell. I'm definitely fine with it right now. We're in an area in which selling kind of makes sense for those who want to speculate. I'm not going to sell bitcoins because I have them, so I could speculatively sell. And to be honest, I may do it. It's just at the moment, I just want to wait and see, because there is an underlying question. What are the alts going to do? Remember that what we had back then was when the Bitcoin started its crash, in those moments, remember what Ethereum has been doing. Ethereum has been quite significantly bullish in that period of time. So, you can see it was like in here, Bitcoin was falling like shit, and this is where Ethereum started to surge, all right? So this is Bitcoin crashing, Ethereum surging. So we could have the exact same thing. Bitcoin consolidating and having an alt season following, and probably led by Ethereum as well, just like back in 2018. So if we were about to do this, then I would pretty much like to still have my Ethereums in my portfolio for my speculative trades. But what it says is that we've been reaching out to fucking 23% on Bitcoin. So what if we just were about to do the same on Ethereum? I mean, retracing 23% on Ethereum is definitely a different target. It's reaching out to this previous bottom, which technically speaking kind of makes sense. So going in there will make a freaking much more interesting trade, like doubling the current Ethereum prices. Still, the problem is it's been happening in the past. Ethereum surging with Bitcoin going down. It's been happening. So it could happen again. But does that mean it will? I don't nearly think it is. So I would say buying right now Ethereum ahead of this potential scenario can be done, but that's only doable with a breakout trade. And the problem I have is that in a daily chart, I can't see a goddamn breakout candle. This doesn't look like a breakout candle. Look at this upper shadow candle. So much hesitation. We're not pushing through the trend channel. I would like to see this happening in market. Bang! Nice bullish candle closing above the trend channel. That will be a goddamn good sign that this market wants to accelerate, because anytime we fucking try, we've been failing every time so far. So maybe this is just fake attempts because we try, but still we do make higher highs each and every time we try it out. So at some point can just be accumulating the bears, feeling like, oh, the bulls are failing and failing, so definitely the bears are going to strongly taking it over. What if they don't? I mean, we just exhaust the bears bite by bite until they actually surrender. And that's what I think it is, because the structure, the price volume structure I have on Ethereum is like what I've said before. I think a goddamn lots of buy and holders are in here. So in those contexts, that generally doesn't mean we break our trade because we've got a shit tons of buyers getting in this market. I think they all got into very interesting prices already, and they're buy and holding, which means what we're gonna have as a breakout is more likely the bears surrendering than the bulls getting in massively. I think we're in this kind of market in which we're just gonna accumulate the bears, fuck them up. No bears, no longer a bear in this market, so we're going to search for higher prices, just going to search for the profit-taking areas for the bulls. So what have I done facing this? I still have this target because, to be honest, I wouldn't be surprised if we were just about to fail in here. But what I've done is that instead of targeting all my profit takings in here, I had a limit. All right, I had a limit target in here. I just put it 50% of the amount in here instead. All right, and I just let 50% open with a target to 400. Just what I have in here suggests if it has to happen, I think it's gonna be pretty fucking FOMO, meaning we go there, all right, we start rising, we surrender, the bear starts to surrender, we've got no more bears in this market, and bang, big FOMO trade, like enormous number like we're rarely seen, like 40% in a day, and obviously everyone will be there, oh my god, I need to have some Ethereums, and then the FOMO fucking trade will start playing its game. Simply because we'll have no sellers, we'll have stupid buyers or short-term buyers, and absolutely long-term holders who will not give up until they reach out to their targets. All right, so that's my plan. I'm just switching to a slightly more aggressive trade on Ethereum, but obviously if it goes down according to Bitcoin and if both are heading to the downside, I'm just going to give up with the Ethereum speculative trade with a tinier gain than expected, but still a gain, so that's fine. All right. And as you can see, the bearish news flow we had with Binance hack and stuff like that apparently doesn't really bother the market. So that doesn't mean it's not going to happen tomorrow. All I can tell is that for now, prices are heading to the upside. Bitcoin's been reaching out to a second expected target. And I think Ethereum still lags, but still has some good potential ahead if, I don't know, some kind of good news show up or whatever this is. Just the bear surrendering will be enough for this trade to trigger. Now, out of cryptocurrencies, the big game come out of the US stock market, which is, and I think is going to be passionating this week because of some complicated trade. We're trading inside ranges. Remember, that's what I've been contextualized for you guys throughout Discord when I was skydiving. So I gave you that we're probably late stage, early bearish trending. So we might expect some range, some sideways activities in here, ups and down, stupid breakouts, anything to just trap some stupid traders. And then we're probably going to start a deeper trending, kind of a wave 3 structure. So at the moment, don't be too bearish. If you wanted to partial profit take, I think that's fine. That's what I've done later last week. So partial profit takings have been done in the areas I gave you. So I didn't profit take in here. I partial profit take in this area. And that was nice, all right, so just a 25% profit taking, to be honest, it's not a big of a deal. I'm still bearish, but I still think that we've got some potential to expect. So why do I get to this conclusion? For a simple reason. Most of the assets I have in my portfolio have been giving some very nasty signals last week. So have a look at this. I mean, just deleting the informations. That's not good. I mean, we try to recover. We do another bearish candle close. So we might go sideways for a bit, but still, we must expect some acceleration in here and probably heading toward this target in the future. So I think there is an in-between area, like in here, the 2010 and 2008, 208 dollars. This area I think is a strong area, but we do have a bearish momentum in a bearish cycle with bearish prices on the support context that doesn't do the job. So we've got everything we need for a bearish breakdown to occur. I still think there is still a lot of potential coming up for Tesla. Apple, bearish engulfing structure, signal, triangle, man, that's a weekly signal. It's not good for them. So I think we're just triggering the crashing structure. It's just like the 17K in Bitcoins. No one think it's going to happen, even though technically speaking, it's really neat, clean. I see absolutely no goddamn reason not to mark this out. We've got a bearish momentum on the weekly chart. As you can see, we've got lower tops and lower bottoms, and now we're going to do it with prices. So I mean, I see no goddamn reason that this market doesn't reverse to bearish, and after this stupid bullish trend, this is going to be a crashing structure. It's a speculative crashing market. So I see the exact same structures at Bitcoins. We're going to go there, bam, we're going to just hope phase and then sell again for the pain trade. All right. So Apple, very, very nasty trade along the way. Microsoft, still pending. Still, we broke the previous week's low without the previous week's highs. And the thing is that we still maintain an hesitating close. So I kind of wait for another couple weeks or better and more reliable information to trade this one. But still, same thing in here. We've got a bearish momentum with possibly bearish prices coming along the way, but the momentum doesn't come along with prices, and that suggests this thing is ready to crash whenever ready. All right. So first of all, we fuck up the volatility return area. So if this thing crashes, it's gonna go down in here and then make its dead cat bounce. And the structure is different from the other ones. I mean, Apple is more mature. We've already been going down. We've already done the dead cat bounce. We're at this stage in Apple, but still, Microsoft could be still trading what was the previous Apple's market top. All right, we could be there with Microsoft today. And then, as you can see, we go down, we go back to the previous volatile area. So that's exactly what I forecast to happen on Microsoft sooner or later, going below those prices whenever the momentum will fail to find new buyers. AMD, I'm still having this one, as you can see, pretty nasty dead cat bounce as well. The structure in here is a lot more complex, but still, this is a valid dead cat bounce. This requires a stop loss, so if we go there and weekly candle close in here, obviously I'm out. But at the moment, I don't nearly even think it's going to happen. Google as well is pretty much complex to trade because we're in this area. It's hard to say if we're going to have a pullback or not to fill the gap. We see this one in a daily chart context a lot more clearly. I would like us to go at least there, so I would be able to sell some retracement and have some much better risk reward ratio to trade this double top structure, because to me the danger is that this is somehow something close to Boeing in terms of structure. Remember how Boeing has been trading, gapping down. I was expecting some retracement and obviously we had none, so I had to reinforce Boeing last week on bearish breakdowns, so tinier position sizing obviously, because I was waiting for a pullback that never showed up. So we could have just the exact same thing along the way in terms of Google. No pullback and will strongly reverse. So the structures are pretty much messy in here. The reason why, if you have them bearish, then you're fine. If you don't have them, then I would say, is that really necessary for you to have Google sold in your portfolio when in my condition I'm selling pretty much many things at the moment? So I would say adding this on top of that doesn't nearly make sense to me. It doesn't worth the risk. Sorry. So yeah, not necessarily going to have a pullback, but if you have some other assets already short sold, then there's not a necessity to go fully loaded in bearish trades in the US sector, because if some fails, they're probably going to fail all. So you do as you please, but I don't think this one is the most reliable ones to trade. As you can see, Tesla's, Apple's, I've been giving you some nice signals, so why piling up with Google? So I myself will stay away from this one at the moment. All right, same thing goes for Visas. Because if you've seen in a weekly chart, we've got the bearish engulfing structure. We've been closing below the previous week's high, but still it's a positive candle and it's closing on the 50% upper area of this candle, still with an upper shadow. So it could be nastily bearish and giving some pretty strong sell-off signals this week. But all I'll do is basically put an alert out of this area setting that this is validated reversal trade if we ever break the previous lows again this week. All right, so I don't yet know. All I know is that if we go there again, I want to be alerted. But otherwise, I think this is, just as Google, not something that really worth the risk. Nvidia's, Cisco's, they all do well. I mean, Facebook's reversing as well, bearish signal along the way, bearish engulfing, trending structures. So this is not good, all right? This is definitely a market about to crash as well. Cisco just about to crash as well, but this one for the first bearish leg, I mean, we go in here straight line and then we let it go with the pullback, all right? Nvidia, this one is tricky to trade. I still have my tiny position that I took in here, and I don't really know what the fuck I'm going to do with it. Either this thing we're going to go straight line, or we're going to have to do the second leg with a deeper retracement for the dead cat bounce. So I'm ready for everything in here. Tiny position sizing because the stop loss is pretty fucking far from this entry price. SQ is doing well. We have the dead cat bounce, perfect structure. We could go a little bit higher. We could have a second leg in here as well. So tiny position sizing. But this one I've got almost I don't know if I have a perfect price, but I've got a good price on this one. So stock buy break even. If I'm stopped out, I'm going to sell again in this area. If it goes along the way, then I'll just let it go for the speculative crash, the hope phase pullback, and then the pain trade. All right, the usual stuff. You should know how to trade how to trade crashes by now. I've been repeating that stuff so many times already. But you only trade them when I talk about them, all right? Remember, that's the rule. I've been giving you this clearly in the PDF manual. If you're a beginner, don't look out for crashing structures on your own, right? You really need me to see them first, to validate or to share them with you, to be able to trade them. And if you do, get your hands on the dirt. Be aware that this is tricky because this is psychological structures. So if you do get in there, tiny position sizing if you're a beginner. If you just want to try it out, I'm okay with it. If I'm here to overview this, I'm fine with this. But very tiny position sizing. This is where professional traders makes a lot of money. I mean, trading crashes is definitely what brings a lot more, what brings the biggest gain to me. But still, I know it's attractive. I know it's tempting. You want to get in there. You want to make a shit ton of money when you're learning. But still, the faster you want to go, the worse you will ever have chances to end up being a trader someday. So take your time. Don't rush. It doesn't worth the shot. You rather like to focus on a long-term vision, saying that knowing that you need at least 3 to 4 years to actually, first of all, get experienced. And when you get experienced, you rise the risk taking, you rise tiny but steadily the leverage you put in your position sizing, and then actually a few years from now you'll be able to professionally trade safely, long-term vision, without daily problems, without shitty big drawdowns and stuff like that. And you would eventually reliably be able to have sustainable incomes coming out of trading. Because if you had something that goes sawtoothed every fucking day, I mean, one day you make $1 million, the day after you lose it, that's just not how you build yourself for life. It doesn't work like that. Anyway, so Netflix as well, pretty fucking bearish engulfing, closing at the lows, everything needed for a fucking crashing market coming along the way. Amazon is the one I'm the most worried about for the week to come. It's a little deeper than expected for a dead cat bounce. We normally fail at 76%. So this one, I'm not reinforcing this one at the moment because I don't know what to do with it, all right? It's definitely a crashing structure kind of trade. We've made 35% retracement or 40% drop, 2 waves to the upside. Normally we should be failing lower. The earnings are good, stuff like that. But what I have is a pretty fucking bearish momentum in here. And anytime this thing triggers, then this is what is going to come after, all right? Not necessarily that violent, but you know how it goes, right? The crashing market, bang, panic, and then dead cat, bounce, hope phase, and the strong pain phase, and the long pain trade coming afterwards, all right? So I'm still bearish on this one. I'm not reinforcing until I get clear and clean bearish signal, even though this one is bearish. We've made breaking the previous low without breaking the previous highs. We're closing below the 50% of the candle with a negative candle close and an open shadow candle, but still we're not nearly closing significantly bearish enough to me to be 100% sure that we found the dead cat bounce market top. So I'm not yet able to reduce the stop loss sizing and therefore having some money available to reinforce. So I'm waiting for further informations on Amazon, but I'm still bearish. So what I've said, like, if you get that, we're about to trigger some 30% drop or more, from 30 to 60% drops on assets that are big fucking waiters in the indices, the Amazons, the Netflix, the Facebook, the AMD, the Apples, the Teslas, all those guys, they're weighting shit a ton in the indices. If Google's goes along the way, then you know how it's going to end. It's not going to be pretty. But still, these are weekly fucking signals. So if you think it's going to happen on Monday or Tuesday or Wednesday, you just got it all wrong. It may take weeks to trigger. So the question is, how about the timing? You need to be bearish because you don't know. It may trigger on Wednesday. You don't know that. So you need to be prepared. This is why we speculate. So when things goes unexpected, you're already in and you don't have to stupid trade or reactively trade to the market. You'll be in, you'll have your plan, and you'll just be there reinforcing because things happen to be going and playing faster than when you were expecting. At the moment, we're in the speculative area. I've got just early signals that the bears are taking it over slowly but steadily. And we need confirmations from the weeks to come. So this week is probably just going to try invalidating this signal. So you may expect some retracement first, some kind of fighting of the bulls doesn't want to surrender, and then a lot of battles showing up in this area for probably 1 or 2 or 3 weeks. I mean, I expect some ranging in the forthcoming days. The question is how long this range will last. What is going to be the catalyst that's going to push us either up or down? What are going to be the breakouts? The only answer I can give you is what are going to be the breakouts I'm going to be trading. I'm not going to be trading any fucking bullish breakout. I'm going to be trading any bearish breakout, of course. But that's all I know. I have a bearish vision, I have a bearish bias, and I have bearish signals. And I have bearish prices as well with bearish momentum, so I do have stuff to trade. So what does that mean? Any pullback, I'll sell it. Any bearish breakdown, I'll sell it. Any bullish breakout, I'll probably lower my leverage or trigger some stop losses. That's all I'm going to say. If the market managed to push us higher, I'm going to slightly but slowly getting out. If the market just pullbacks to search for bears, I'm going to be there to sell. So pullbacks, resistance, bearish signals in bearish context, I'll take them. Definitely will. Bearish breakdowns will as well. If we do break up on top of resistant context and stuff like that, then I'll probably set myself out of this game and we'll maybe be able to go historical highs again. That's an option, all right? You don't say it's not going to happen. Now about WTI, all right, just have a look at the daily chart. I still think that in a weekly perspective, I'm still searching for the same old stuff, which means I'm waiting for the 1 hour context to reach out to this area. If I have a selling signal in here, maybe I'll take it, but I'm most likely going to take this one. 61% retracement, 76% fib, overcoming the bearish context is definitely the area I want to trade this week. Regarding the gold, this is where I have the strongest concerns for the week to come because I see this one pretty fucking weak. We've been managing to break up the resistance and kind of would have been able to activate the double top structure, all right, kind of double bottom. We could have been, bang, surging in here. And as you can see, we're still trading this trend line, which means it could happen, finding some support, bam, US equities just fall like shit this afternoon, and we could have gold rising. The only option to do this is for the dollar to fail, all right? The problem is I don't see the dollar failing. I see the dollar doing any fucking thing it can to hold up in the current price area, all right? It's doing anything to hold on to supports. Whenever we fuck this up, there'll be no support. But I see range structures coming along the DXY. So reason why I see the gold under pressure for the week, for the days to come, it doesn't support bearish stocks. It's most likely we're going to just try to push down riskier assets or risk-on assets like or risk-off assets like the yen. You can see yen has been breaking a resistance but feels pretty weak. I think the bears will do any fucking thing they can to just push this down, and they have a lot of room to do it. Kind of pull back into this area or this one, still building a higher low. But I think in here we can have some pretty fucking deep retracement. And if we do have that, then imagine this. Bearish gold, bearish yen. Why the fuck would you like to have bearish stocks in the meantime? It's probably going to be retracing stocks, pulling back to resistance, testing the previous highs and previous bearish breakouts and stuff like that. And if they do hold, then gold will find a support, yen as well, and then we'll have surging to the downside equities with all the risk of assets surging as well in the same time. And we'll have a bullish major breakout of the yen index in here, probably a bullish breakout of the gold and bearish breakdown on the dollar. But so far I don't expect this to come for the week ahead. More likely a couple weeks or 3 weeks from now. We're heading towards summer trades, which means volumes are going to go down and stuff like that. So if there is no bearish catalyst, like an unexpected black swan stuff, the VIX going out of control, and this kind of stuff, like no deal or no deal with China, and the worst case scenario goes up with China pulling back and getting more aggressive at the US. If we've got some of those stuff, then definitely it's the worst case scenario and it's not going to be a pretty summer. But if things do well, we do have a deal, stuff like that, then we could just like morph in trade. We bring up the very tiny amount of necessity oh man, I don't know how to say that, of required liquidity to the market, just to making sure that we've got enough credit flows to avoid some nasty problems with the junk bonds and stuff like that. We just maintain the system ongoing, and we could have a pretty unexistent summer, like dead low volatile summer. It could be possible. I'm not betting on this anyway, but still it's possible. So if it happens, then just let it go. Enjoy some nice vacations, spend your money, and we'll be there to trade that shit again back into late stage July or stuff like that, right? But if that's the case, if we're heading toward a pretty low volatile summer, then just, oh my God, do something else. I myself I'll get to enjoy some vacations and things like that, and we'll do eventually some scalping and stuff like that. I mean, we'll see. So for the week to come, first thing I've done this morning was the partial profit take on the NZD GPY as well as CAD GPY and USD GPY. So I've been lowering my exposition to yen. Partial profit taking, all right? We're reaching out to my target areas in here. We're below context. We've got the breakdown. So if we were about to retrace, we'll probably deeply retrace on NZD GPY, like kind of retracing in this area, all right? So if we do this, I'm definitely wanting to partial profit taking here to sell the double in there. That doesn't mean I'm getting out. This scenario just is going exactly according to the plan, so I'm fine with that, all right? All it says is that we're bearish breakdown in here. We have the target. If we go there, I'm fine. I'm definitely fine with it, and we're going to go straight line to the maximum target. But still, we could have some pullbacks before it. Right, because that breakdown, I don't really like that. I would have liked us to range a little bit longer in here to really accumulate for the breakout. As you can see in here, we broke this area, but there's no accumulation. The accumulation is pretty nasty. So in those kind of contexts, just be ready for some short and unexpected pullbacks. So facing this, I'm reaching out first target. I'm taking 25% off the table, just to reinforce if any pullback shows up, and if it keeps on going straight line to the downside, I'm fine with that. I still have 75% in this trade, all right? But still pulling off the yen slowly a bit, partial profit taking on those trade, just if they were able to sell it, just to buy the gold, to sell the gold as well, and do anything they can to block the volatility in the short run. If they do, obviously the junk bonds will find some sort of support in this area and try to push the divergence, because you can see we made no divergence so far. We made a tiny one in here, but it's a short-term divergence, not the kind of not really the kind I like. All right, I like cycle divergence kind of trades. You can see you got 2 cycles in here, 2 bullish up cycle, and sine wave is divergent, but I don't nearly trade sine wave divergences. So what I would like is pretty much having another attempt in here, kind of a bam, bam, and then this one being divergent is definitely what I'd like to see. All right? So if they want to play this game, I'm fine with that once again. If they want to pull down the risky They want to pull down the risk and destroy volatility. This is how they'll do it. They'll try to buy some junks and stuff like that. They will try to push down the VIX back to 15 or some stuff like that, and hoping that everything goes under control, because if anything goes out of control, then this is where we're going to have the nasty buyouts of the VIX selling positions and things like that. All right, so watch out for yen, watch out for dollar, but mostly watch out for gold and WTI. I think if the market wants to hold on the bears, hold on the supports at Wall Street, they're probably going to try selling the gold and selling the yen earlier this week. Then I think we're going to have a pretty interesting selling signal for US equities when we'll have probably the same timing for WTI, probably later this week. All right. So equity trading, getting to the conclusion, if they manage to buy some, to sell the VIX, buy some junks, sell the gold, and buy and sell the yen to hold on with the dollar, kind of a sideways action on this one, then this is what's probably going to happen in there in the US equities, kind of maintaining this dip, going back to this area. All right, I'm going to give you that scenario. That's what I've done for the French users, and I think that's the best way to figure this out. All right, let me just delete that, and you'll clearly understand what the hell is going on. So delete the prices, make some reliable analysis out of here. You're just trying to understand the goddamn story. All right, you have this, and you're just going to try to put a name on this, what kind of context this is. So as you can see, this was trending. All right, the market has been trending. You can easily see this using these signals. You can see the support contexts are unfolding, so that's a sign of late stage trending, very late, very late stage trending. Bam, bullish breakouts in here. That definitely means this is the final excess area. Market is breaking down. That's exactly when you see this. All right, bearish breakdowns in here. So that's definitely the area in which the market has been topping up in this very late trend that we had. I mean, it's been exhausting, yes, but we've been terminating with this. So does that mean we'll go bearish straight line in here? No, it means we were bullish ranging, now we're bearish ranging, and we're about to eventually bearish trend, but still, that means still is a range. All right, so we go down, we build this range, and you can see those deep pullbacks we had in here. Those have been selling. All right, we bearishly orientate this range, but still maintaining the range context and stuff like that. We broke this range to the downside. You can clearly see a break in here. All right, we broke both the context channels and the trend channels in the same time. So this is where we've got a breakout context, or at least a broken level. All right, but still, what do you see right after? We have the breakout target. Normally, remember that in a breakout, you should have the target. This target should have been showing up in here. Didn't. It showed up later on, and the market failed to go there, pulled back, showing another fucking range signal. And now we've got two range signals on the opposite direction and in a pretty short time scale. So what we're having here is a range, and we can easily see that something has been going on with this range, and it's it's in this area. All right, you can clearly see that we've been building a range in there. All right, and out of this range, all right, we've been pullbacking. All right, we've been supporting this area before, and now we're resisting below this area. All right, and we're building a lower range. Kind of gives us a 3-area kind of trade. All right, we've got the previous range in here with the market top. We've been trading it, bearishly exiting this one. We're ranging this area, and now we've got two options. Either we range flat before breaking down as well once again, or we're going to retrace the previous range, testing it, rejecting it once and for all, and afterwards we're going to have a trend. These are the two options to me, and as you can see, this is exactly what's happened so far. Right, we can see this polarized area, support, and oh man, it's becoming a resistance. We're testing it again as a resistance later last week, but like I said, I don't want to take an overweek trade in that kind of context, because we could have gapped up in here with the deal or stuff like that. Obviously now we know we didn't, but still. So I think we're trading this area. As you can see, it's pretty fucking volatile and hard to say. This still is a range. All right, we've got rectangle. This is definitely a fucking range. I gave you this trade right on the bottom on Friday, but still, like I said, if you bought this out, you should have been profit taken by the evening, and that was just it. All right. So what do we do in here? You could buy this morning. I would see no problem with that on intraday trades. You do have a signal in here. Just let me show it to you. All right, so you've got an oversold cluster, just waiting for framework to build itself. All right, so red, blue triangle, out of context, oversold, definitely the kind of stuff you could have intraday bought. All right, you bought that intraday and you target the opposite area or the selling area. That's kind of trending. That's risky. So obviously, if you take that, you must be an experienced trader. You must put like 0.6 to 0.7% risk in that kind of trade, no more than that. It must be less than 1%. The stop loss must be pretty fucking wide, like the stop loss must be there, or at least below those lows, and the target is pretty much a 1 to 2 risk reward ratio, so not really that good. All right, so if you take it, it's just because the trade is pretty obvious, but the stop loss must be far away from enterprises, and I'm not even getting in there. All right, at least not personally. So like I said, if they manage to sell and push down the risk, this is what seems to be the most probable to me. Building a higher low in here, so we'll stop retracing and we'll have pretty decent odds this time to break that resistance. That doesn't nearly mean we're going to go up to the previous market range, to the previous market top range. More likely, I think we're just going to retrace interesting areas in this range. All right, so I'm going to give you this area in here, why I got to this. All right, so we're back into the 1 hour chart time frame. Like I said, we're going to use in here a fixed range. All right, I take the market bottom in here to the market to this area in which we bearishly broke the range, and this is where we've got the strong volume area. So this is why I'm getting alerted in this area, because I think we could reintegrate the previous range and we'll just get there to test the volume area. All right, the volume areas is where we've been leaving some tracks behind, and the market may just want to go back there. So this is a key level to me, all right, just as this one will be. And these are the prices I'll sell with very short-term and very aggressive signals. Like I'll be there into trading 3-minute chart time frame in these kind of areas, all right? Because we've got strong volumes. These are really strong interest area. This one, already been trading this one, so I'm not going to sell the same price, right? But be aware that those areas I'll definitely trade in, all right? These are HVN, high volume node, all right? So these are HVN on this market. All right, so close to this HVN, I will look for very aggressive intraday trades. Same thing here, all right? So close to this cluster, 61%, high volume, stuff like that. You know the drill, all right? So this is what I'm going to be doing as a swing trade this week regarding indices. The rest I don't nearly even give a shit. I've been partially profit taking as well on Shanghai Composite because I think we're reaching out to some areas in which there is no more to come. We've had ranged, all right, so partial profit taking has been done in here just to sell again on any pullback that may show up. In the euro area, it's pretty much the same stuff along the way. If we manage to build the range in here and pretty much some significant information suggesting it's about to come, just delete the prices again, all right, and make the same analysis. I mean, if you don't know what to do with the market, then you just don't trade it. You need to have a plan. You need to have a scenario. Whether it's going to happen or not, you don't know. But still, you do anything you can to manage the risk. So same thing as we done with the US earlier, right? You can see nice bullish trend, very late stagey, kind of exhaustion breakouts in here. This is where the market is topping up, right? You can see trending, but some range signals, and then the trend attempt. So this is exactly here, all right? Not even showing prices, I can tell you that this is where this trend has been exhausting itself. So selling this area, all right, this signal, like everything in there is everything you would have been selling without even showing the goddamn prices, all right? Then bearish breakdown, suggesting no matter what happens, this is where we had the reaction. First time we broke to the downside. That doesn't mean we're bearish trending in here. It just means we're bearish ranging. We were bullish trending, bearish ranging, consolidating, before probably bearish trending later on. All right. We still don't know about that. All I can see, it was bearish breakout. Nice. All right. We got to the price. As you can see, prices have been reaching out to the target, so that's a good sign. But now we've got range activity. We had another underlying breakout that's not been reached out to. As you can see, prices didn't manage to go to the target. That definitely means we're ranging. All right. If we were trending, we would have got down to the target and gone beyond and below. Now we don't. So we've got range signal. All I suggest is that at some point something in here is going to push us upward. We did, as you can see, bam. Trend channel has been broken up in here. I think the next time we're just going to try building a higher low or some stuff like that, and we're going to search for a bearish signal in here, probably in conjunction with the context, and this is where we'll have everything we need for a bearish trade. All right, now let's put prices back in the game to see if that makes sense to us. Just like we said, this is the area where you needed to sell. This is the area that broke down, pull back, bearish signal, bam. We start to build a bearish range. Now, what we need is the range. All right, we do have a high in here, but a low as well. So what the fuck is that? It's hard to say. It's very volatile range. All we can say is that this is not about time to sell in here. All right. Buying is very dangerous as well. Very dangerous. So I would say just let it go with those trades and wait for further information in a more mature range. When this structure will be matured, if we find some bearish signals in here, I'll take them. If the market ends up in this area, I'll take some bearish signals as well. All right. All I know is that the interesting areas are close to this, 12,160, 70, or 12,300. And in this area, it's going to be pretty fucking interesting to sell. So waiting for further information in the DAX. For those who trade the European session, that's exactly what I'm going to be doing. I'm ready to reinforce, obviously, but I've been partially profit taking earlier this morning. That's the first thing I've done. So I've been taking 33% off the table in the German DAX, a little bit more simply because I had worse prices in this one. I didn't cut great entry prices, so still I have them, but I had to partial profit take more to be able to pay for my stop losses on the market top. So now I got free cash available for some reinforcements. All right. So that's exactly what I'll do, but I'm not reinforcing out of support area. I'm reinforcing out of eventually any pullbacks we could have some resistant area for the days to come, or eventually weeks. If it doesn't happen this week, and if we have lowered volume because we're heading into May, if this happens, then, I mean, don't be too aggressive. If volumes are going down, volatility is going down, we probably know that until further notice, we're going to have a non-interesting summer setting itself. All right, I'm going to leave you guys with that. Have a good day. I'll see you tomorrow. And so I'm just going to be honest to clean this up. I've got almost 200 emails to answer, so it's going to take quite some time to catch up on the delay. I've been putting on the work recently because this skydiving stuff and stuff like that. It's been putting me out of work, and the work stuff has been piling itself. So don't be surprised if it takes long to process the emails you may have sent to me, or if you got out of your subscription, you may still have access. As once again, I always give favor to the users. So many of you guys have been unsubscribing. Maybe some of you have been unsubscribed for weeks, and you still have access. So enjoy that. That's on me. That's on me. All right. It's a free glass. So the thing is that I'm going to catch up with this for the week to come, but the problem is there is a lot to do, all right? So please don't mind me if I'm very late at activating people or answering emails and questions like that. I'm going to do anything I can to catch up on this, but like I said, I had to take a few days off, and I wasn't able to answer the emails in the meantime. All right? Bye, guys. See you tomorrow.